The U.S. economic and financial system, we believe, is on the brink. And even though that's not widely understood today, we think that there will be events that happen in the next 6 to 12 to 18 months that will definitely help people understand things are not good. I want to talk for a few minutes then about some negative fundamentals which we think at this point cannot and should not be ignored. The first one of those fundamentals is there is cheap overproduction. The world is massively overproducing everything at viciously competitive prices. China, India, and Asia have become forces for cheap overproduction, and I can tell you that China could produce every single manufactured product in the world that every person in the world consumes, just China. So there's massive overcapacity for everything worldwide, and that's one of those fundamentals that's not going to change, and it's going to affect everything. Over 2 billion low-wage workers have entered the global workforce, China, India, Asia, Eastern Europe, etc., and they work for wages 75 to 95% less than Americans, and that's not going to change. U.S. factories must now move overseas to compete. American businesses can't produce products as cheap as China, India, Asia, etc., so to survive, they must move their manufacturing facilities out of the country, permanently eliminating millions or tens of thousands of U.S. jobs. A few years ago, I think it was over a decade ago, you saw Chrysler shut down a factory and move it to Mexico. A few years later, they disassembled that factory, put it on a boat or several boats, and sent it over and reopened it in China. Even Mexico can't compete with China. Okay? So these are realities that we're going to face the rest of our lives. Okay? The U.S. middle class is being eliminated as millions of formerly well-paid white and blue-collar workers are forced to low-paying jobs, such as a greeter at Walmart or McDonald's or Starbucks or what have you. Business profits are being permanently squeezed as costs, raw materials, shipping, medical labor rise while prices fall due to global price competition and the internet. The internet actually suppresses prices and keeps you from having pricing power because everybody can shop you all over the world, and so the internet has suppressed a lot of prices. Only massive U.S. consumer consumption or overconsumption has kept the U.S. and global economy afloat in recent years. But U.S. consumers are now maxed out with debt and things and are seeing declining incomes. How many more things can you buy? How many more television sets do you need in your house? Maybe you got 3 or 4. I bet you most of you have at least 3. Okay? How many DVD players do you need? How many new gadgets? How many new cars? I mean, at what point do you say, my gosh, I'm drowning in all my stuff? Well, that's the average American today. They're drowning in their stuff, and most of them have gone massively into debt in order to accumulate all that stuff, and you finally get to the point where they just don't need any more stuff. They're maxed out on debt, and they're maxed out on things. Okay? To keep U.S. consumers borrowing and spending, the Fed has created 2 huge inflationary bubbles over the last 10 or 12 years in stocks and in real estate. Both bubbles are now very vulnerable to a massive implosion or collapse. We saw the first bubble, the stock bubble, which the Fed helped create, starting about the middle 1990s. It was the high-tech bubble, the dot-com bubble, and so forth. And we saw what happened when it finally, and if you got my newsletter, we begged people to get out of the stock market. We begged them to get out. And starting March of 2000, going through about October of 2002, the stock market dropped $8 trillion in value. $8 trillion. A lot of investors lost 50% of their 401ks. And I got to tell you that they're not back even. In the last 6 or 7 years, the stock market is only up about 13%, about 2% a year. Okay, that's not even keeping up with inflation. But the dot-com bubble in the stock market rolled over starting in the year 2000. The Fed said, good grief, Charlie Brown, we've got to find something else. We've got to distract the people. It's kind of like when the people got restless in Rome and then they had to crank up the Colosseum and the gladiators and so forth. And so we had to distract the people so that the wealth effect didn't disappear. And so they switched. It was like a big shell game. And they got everybody to switch their attention to the real estate bubble. And then they cranked interest rates down and they cranked trillions of dollars of new liquidity into the system. And guess what? They gave us the real estate bubble. The real estate bubble and the stock bubble were the courtesy of Alan Greenspan. Alan Greenspan expanded the U.S. money supply 50% while he was in power, and so they gave us the real estate bubble, and the real estate bubble is now looking very, very iffy in many parts of the country, and we're going to come back and talk about that later. Another reality, or fundamental, foreign dollar holders are getting very nervous. We have twin $500 billion deficits. That's really not true. The real budget deficit's about $700 billion, and the real trade deficit is about $880 billion. So that's 15 to 16, or 1.5 to 1.6 trillion dollars in the twin deficits. So our twin deficits, budget and trade, very low U.S. interest rates, a weakening U.S. stock market, and faltering U.S. economy are causing foreign dollar holders to move into other currencies. David's going to talk a lot about what's coming for the dollar and how that's going to impact gold and a lot of other things in the next few years. The Fed and foreign central banks only have one tool left to fight a global deflation, and that is their printing presses. Trillions of dollars in new liquidity are being produced to stop a global debt implosion and depression. 2 weeks ago, the Fed created $52 billion out of thin air in 1 week. In 1 week, $52 billion. Annualize that, that comes out to in excess of $2.5 trillion. They're running the printing presses like there was no tomorrow. Last week, they increased the money supply about $36.5 billion.